will now continue with another presentation about the topic of green finance given by Mr. Roland Mechtler. He is the head of Group Regulatory Affairs and Data Governance at Raiffeisen Bank International AG, and he's in charge of the cooperation with supervisors and monitoring and implementing the newest regulatory developments. He will now hold a presentation about the topic of green finance. Welcome on stage.
Thank you very much. It's also for me a big honor to speak here today at a conference organized by students for such an important topic. As introduced, I am responsible at Raiffeisen Bank International for implementing new regulations, and this since a longer time. And I mentioned this because there was the question before, when did it change or how did it change? One perception I had over the last months with sustainability, it reminded me of something else which happened 12 years ago when we had the financial crisis, and which was peaking in 2008 with the Lehman default. There was also very soon a political agreement that taxpayers shall never pay again for banking defaulting. And then it was quiet. It was quiet for a year, 2 years, 3 years, and everybody thought, okay, what will happen? Everybody was kept in the crisis. And suddenly, after 3 years, EU was issuing a lot of regulation and starting to get into action. And then since then, we have been kept busy and we have amended a lot when it comes to banking regulation, and I think we are now safe as an industry. Why do I mention this? Because I think it's the same what's happening now. 2015, we had the Paris Agreement, and then it was quiet for 2-3 years. And since 2018, we see a lot of regulation coming also from the European Commission and from the European Parliament, and a very bold language since the last half year when it comes to the Green Deal and this clear commitment to only make this sustainable finance working here in the Commission, in the European Union. And that is a clear push for the whole industry and also our clients, and also as a bank for us, also ourselves. What the speaker before me told, I'm absolutely convinced that this is true. We are in a transition process and we don't see so much changes now. But I can tell you the discussions we have internally and we have with our clients, this is a clear signal for me that everybody understood the message, how important it is, and there are clear stance by the politicians and regulators to make this happen. And I think that's something, and that's the answer for me. There is a clear change going on, and everybody is more and more committing to it. I also want to say it is a change. It's a transformation process. It's not an easy one. If we change the things how we did before and the way how clients did business before, this is not an easy one. And also when we have very ambitious goals, we also must be aware that we do not lose some stakeholders in this process and also some industries, because we have different levels. Also, if we look at our home market in Central and Eastern Europe, we know that we have different levels of transformation and transition, and also this, depending on this, we also, the level of the speed of the transformation process must be in the proper way. I shortly want now in my 10 minutes to highlight what is the role and what is the role of banks in this process. So you know the Green Deal, which was published by the European Commission with the clear goal that Europe as a continent gets the first climate neutral continent with 2050. And also what was issued recently by the Commission was the action plan for financing sustainable growth. The idea behind is that the finance system and banks are very important for reorienting funding to sustainable finance, and here to use the financial system to accelerate the speed and also to change the behavior of the industry. The clear goal with this plan is that transparency is fostered and also the kind of long-termism is also getting a principle for taking decisions. Long-termism means, to be clear here, usually you say in a company long-term is something a horizon from 3 to 5 years. Speaking about long-termism, if the EU Commission does, it's up to 2050. So we're speaking about a 30 years horizon, simply because the assumption is that by then the climate change will be fully enacted, will be fully here, and by then all these all these measures have to be taken to be fit for the future. One key assumption is also that going and investing in sustainable finance, this does not automatically mean that we see lower returns for investors. So the goal is to change the picture in such a way that if you go for sustainable finance, because we have the climate transition and we have the natural disasters, on the one hand, we have as mentioned today, we'll have carbon taxes. This means that if you invest in sustainable finance or sustainable projects, your investment will be more profitable compared to non-sustainable. The action plan very concretely foresees 3 aims. The first aim is to reorient capital flows towards sustainable investments. The European Commission estimates that we have a gap of 180 billion per year to close to reach the energy targets by 2030. To fill this gap, the reorientation is required via the financial system, and it's clear that it cannot be closed by public money, it must be closed by private money. And here, the clear aim is this must be done via the financial sector. If this is done, if we reach this, the assumption is here that we will, if we are more efficient in the production, we will have a competitive advantage compared to other continents and regions. The second aim is to manage financial risks stemming from climate change, resource depletion, environmental degradation, and social issues. What is meant with this? It was also discussed by the President. He said, he read it in the Financial Times, that also central banks are now thinking how these future developments or current developments actually, how do these affect the banks? That's right. That's new for us in the banking. We were not so much aware until now, or until recently, how climate disasters affect our customers. We were not so much aware, if they're not wondering how does the carbon tax affect our customer. These are things which we have now to take into considerations, which we have to take into consideration for our credit processes, for our credit policies, and take here a stance on the one hand from a risk policy, so what risk do we want to take, and on the other hand also to fulfill the clear goal that we want also to support the sustainable finance and the overall process. But this is something which takes time. We are also big organizations, but this change is happening now. Most likely you do not realize it on an everyday basis, but there are very intensive discussions within our organization. And also what was said before, it's no silos anymore. We have it now across the whole organization because the effects are so detrimental. The last point of the action plan, 1.3, foster transparency and long-termism in financial economic activity. Foster transparency is, I think, one of the most immediate actions which are required and absolutely required. As we say in German, Selbsterkenntnis ist der erste Weg zur Besserung. I would say we have to know where we are to improve. And this is something which is currently happening. So we have on the one hand disclosure, new disclosure requirements. What shall be disclosed by companies, including the banks, but also our customers, what they do, and setting here certain standards. This is key, so that we have a clear understanding what is green, what is sustainable, and what is not sustainable. This also goes as far that we will have regulations how retail customers, so people like you and me, investing somewhere, know is this sustainable or not. This will definitely change the behavior, because here with the clear transparency we will see if investment makes sense in the context of the climate change. The long-termism is, as I said before, this is for me a key challenge, because to get out the short-term profit goal and exchange it with a long-term stakeholder view, I think this is a change which is not driven by one company. This is a change which must be driven by the overall markets. You have analysts, you have investors, you have companies, you have the government. So this is something which is a bigger topic, but I'm also confident that we will see here a lot of improvement. From a banker's perspective, what would we need, or where would we see that governments and policymakers could support us? First of all, one big request to policymakers. Make rules, but make it only not too many, not too complex, and don't change it too often. What we've seen in the last 12 years after the crisis, we have seen so many rules, and it's sometimes really hard to understand what is the goal of this regulation. So therefore, learning out of the last wave of rules, I think that would be very important, that always the goal is clear. We want to improve the world, we want to become more sustainable in financing. And this is something which shouldn't be lost by bureaucrats finding an even better rule every day, but stick to the most important ones. Coming to long-termism, which is requested by us as companies and as banks, I would also turn it around and say, dear policymakers, dear governments, also be aware of the long-termism. Short-term changes are not good. What we have seen in the last years is, for example, when it came to, there was a phase where wind power was very promoted and also subsidized with fiscal measures in some countries. And suddenly, after 1-2 years, they were turned off again, there were no subsidies anymore. But what happened was in between, there were projects funded with the assumption of the subsidies, and they defaulted then because the price was a different one than assumed at the beginning. This is not good because suddenly there are people saying we won't never invest in these projects again because once it defaulted, so all in the future will default. So by doing short-term measures is also, it gives good arguments to people against it. And I think the third one is a very practical one, which is already also part of the Austrian Regierungsprogramm, is that risk weights for investments and green investments are lower because the assumption is that the risk is also lower. What we see is more and more research papers. There was one by the Bank of England assuming that, proving to a certain extent, that loans to mortgage loans with sustainability criteria are more secure because there's less energy required and the arrears are much lower than compared to others one. So if these assumptions prove right, I think that would be a very good incentive to foster sustainable business even more. So you see, a lot is going on. The regulations definitely are a help. I can tell you that we as RBI Group already started doing things before the regulations came, but definitely what we've seen over the last 1-2 years is a big push for the industry, and therefore it's good, but it shouldn't be overdone. Thank you very much.